All right, all right, all right. How's everybody doing? My name is Lan Turner, and we're going to get ready to go in through the software, and I'm going to show you how to set up some structure to your trading tools. All right, I had one of our students from here in class. I'm not going to mention his name, but he set up an appointment with me, and he's like, Lan, I need you to show me how you're setting up your software so that it'll do what you're doing. I says, well, I'll just show you for free right there on the YouTube. And he goes, I know, but that's not the same. He's like, I need a little personal hand holding. Help me, show me how you're doing that. And so I thought, you know what? If he's having problems with that understanding, probably other people are too. So I thought that it would be good to go through and review some of the tools in the software and show you how to set them up so that you can make them function. And so you can have the computer or the software help you trade. All right. Because if you're just manually sitting here banging the mouse, that makes it really difficult to trade. You need to have a more systematic method to your madness. All right. So we want to have the computer help us trade so that the decisions are kind of pre-formulated, if you want to say, they're kind of taken out of our hands. Not that we're not in control and that we're not the ones making the trading decisions. We are, but we want to have it be more systematic and have the computer help us trade. The computer is very good at executing our trades for us. The only thing the computer doesn't know is when to execute the trades. All right, that's up to us. That's our job. We need to tell the computer when to execute the trades. But once we've decided how we want the computer to execute the trades, we can turn that over to the computer, and the computer can do it way better than we can. All right, we get tired, we get lazy, we start looking out the window, we start playing on our phones, and we miss setups. So if we can set the computer up to make the decisions for us, then it's a lot easier for us to trade, and we have a lot better success. So I want to show you and take you through and actually show you how to set up your computer so that it'll do that for you. All right. Now we're using Track and Trade, of course, and Track and Trade is the software I'm using to do all of this automation. And here's where you can get your Track and Trade software.
Okay, this is the software I use. It's called Track and Trade. They've got two versions, one for stocks, one for futures. This is the website, track, the letter N, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, so what we're going to do is we're going to go through and I'm going to show you how to scalp and trail. All right, that's that's a method in my experience that is the most successful when you're day trading. All right, scalp and trail. You want to do a little scalping, try and take a little bit off the front, and then try and stay in the market for a longer trend. So scalp and trail. So if the market doesn't make a big long trailing trend, then okay, well, at least you get a little scalp out of the front of it. Or if it just goes a little bump, you get a little scalp, take some profit, and then if it flushes and stops you out with a loss, well, the little profit from the scalp helps you pay for the loss. All right, it's not quite so painful. So there's some advantages to doing what I call scalp and trail. So that's what I want to focus on today, and I want to show you how the software works. Now, again, this is a very specialized piece of software. It's designed specifically for this purpose. It's got tools in it that are designed to automatically trail and trade for you. You just have to hit the button and tell it when to do it, but you have to be able to set it up. So let's go through and set it up. And what we're going to do is we're going to come down through, and I'm just going to do it. I think the NASDAQ probably be a good one to do it on. All right, because it moves a lot and it's pretty active and it can help us see something very much more quickly. All right, so I've got a couple of tools on here. You can see the first thing, I've got the Fibonacci bars turned on. Now, for me, I love Fibonacci. And the reason I like Fibonacci is because it's very smooth and it does a smoothing component on the price bars. And because of that, we can use that in our favor when we set up our tools. All right. And I'm going to show you what I mean when I say that. So I'm going to turn on my Fibonacci bars and that smooths them out. And you'll notice that what we've got is we've got lots of, all the way down this downtrend, each bar has lower highs, lower highs, lower highs, lower highs. Now, a lot of people get confused on that. What do you mean when you say lower highs, Lan? Well, see all the highs of the price bar? See each high? As it comes down that red trend, the previous high of the bar is higher in price than the current price bar. And as the market moves down that trend, as the price bar moves down that trend, you can see that each previous price bar had a higher high. All right, it's a step. It's like stairs, higher high. Now, sometimes it doesn't. Sometimes it gets a little fluff in there like that, and you get another one little thing like that, and you get these little points in here where you get these little spiky dikey doos is what I call them. All right, these little spikes that come in here, these little topping tails and bottoming tails that kind of spike you out if you're using the previous high. Well, those are not generally good times to be trading because the market's not trending very well. It's kind of doing these little spiky things. What we like to do is we like to trade when markets have nice trends like this, where the bars are all nice symmetrical bars with previous highs. All right, that's the nicest trend that you can trade right there. And of course, going this side too, you have higher lows. Same thing on the upside. So you have higher lows. See how each low is higher than the previous low. It's a stair step up. Higher highs and higher lows. All right. So lower highs and lower lows. So we can not only look at that in an individual trend itself and see the bars themselves have higher lows. See the lows on here? Each one of the low of each price bar is higher than the low of the previous price bar. So those are higher lows. All right. And then when we go down the other side, those are lower highs. So this is the definition of an uptrend. This is the definition of a downtrend. Higher highs and higher lows, definition of an uptrend. Lower highs and lower lows, definition of a downtrend. But when we're talking about the individual trend itself, we're mostly concerned about the trend of the market, where you have the higher lows on the uptrend and the lower highs on the downtrend. We're not really worried about these fuzzy tops right in here. See all these fuzzy tops, all these topping tails in here, where they're higher, but they're not necessarily higher. See how you have a lower high in here? This high is lower than that one, but yet the bottom on the high or on the low, it's a higher low, even though you have a lower high. Okay, that's what we call a pennant formation. That's when your market's starting to come into a little pennant formation when you see that. All right, it's called a pennant formation when you have lower highs and higher lows. It's coming into a pennant. So we watch for those, and those are nice little trading spots where you can get into the market and use those opportunities to make money. All right, but right now that's beyond the scope of what we're talking about here. I just want you to be able to identify the higher lows and the lower highs. Now, that's in the price bars. Now, we also have these little yellow dots in here. Now, these little yellow dots are a trailing stopping system. All right, and if we come in here, you can see that you can adjust these and you can put those dots where you want them, however aggressive you like. All right, now it's kind of a happy medium, and it depends. And it's like, well, Lan, what's the right setting? There is no right setting. It depends on what the market's doing. So you have to adjust that to the market. Okay, now I like to start, if you want to talk about a starting point, just start with 1 and 1. All right, just 1 and 1. That would be a great starting point. And so if you start at 1 and 1, then you can move from there. You can decide whether you want to have those little dots closer or farther away, depending on what the market's doing. And we're going to actually have the software trail our trailing stop on those dots so that we can get stopped out right at the most opportune time or the most profitable location. Right? Just let the computer do it. But we need to tell the computer how tight we want those. We can set those really tight, or we can loosen them up. And it just depends on what the trend's doing. If you have it too tight, that's where the spiky dikey doos come back and stop you out just as the market goes in your favor, right? So you get a little spiky dikey doo come in, stops you out, and then the market takes off and goes without you and leaves you behind. So if you have them too close, you have to get back in, or don't put them so close, right? If you don't put them so close, though, sometimes there's an advantage and a disadvantage to everything you do. Well, one of the advantages of having them a long ways away is you don't get spiky dikey dooed out of your trade. But the bad side of that is that if the market reverses and turns around and goes the other way, well, it's a bigger, your stop's further back, and you might lose a larger percentage of your money. All right. And that's mostly painful, really painful, when you just barely first get into the market. Because when you very first get into the market, if you get your stop way back there and the market turns and falls, well, that kind of sucks because that's a big loss. So you kind of want to have the stop, as the market moves in your favor, stay further and further back. So you can adjust that on the fly as the market goes. You get into the market and it starts to trend and you're making money and it's great. And you don't want to hold your stop so tight that you get stopped out on some of these little spiky dikey doos. You can come in here and loosen that up or tighten that up, loosen that up and get those dots further away so you don't get stopped out. You're taking a little bit bigger risk, but it's in anticipation of allowing the market to run farther. All right. And that's kind of the name of the game. That's how you do it. And is anything perfect? No, nothing's ever perfect, and you're never going to catch the exact top. You're never going to catch the exact bottom. but you don't have to make a nice living at this, all right? Or at least a nice part-time job, or however you're looking at it. For me, I like it as just kind of a part-time thing that I like to do. Try to come here, make some money so that I can put it over somewhere else and invest it somewhere else. So this is kind of a quick way to make money, so I don't have to work at the gas station pumping gas. It's kind of my little part-time job, and then I come over and I put that money elsewhere and invest it, probably over in the stock market is where I usually put it, all right? Not that you can't make a full-time living doing this. It's just kind of a hard thing you do. You're still trading time for money. All right. It's still trading time for money. You have to sit here and you have to watch it and you have to trade. That's trading time for money. I like to do my trading time for money, take my money out of here, put it somewhere where I don't have to trade time for money. It's a longer term investing strategy. All right. So that's kind of how I do it. I'm not telling you how you should do it. Yeah, I'm just here to tell you how I do things. All right. So this is where I come to make money so I can invest it somewhere else. So I don't have to go work at the gas station or work at McDonald's so that I can invest somewhere else. All right. That's what I do for money, this one. So let's come through and I'm going to show you how to set up the software. So the first thing we need to know, now the market's dropping, it's tanking pretty good. It's funny because we predicted this, right? So anyway, the market's going down pretty well. And I'm going to just show you over here in the trading tab, we have some tools up here. We have the stop order, we have the market order, we have the limit order, market order. These are just some tools that we use, right, when we're trading. And then we have all these little programmable buttons down here where we can make these things do all kinds of fun, exciting things. And so I'm going to show you a little bit of both. I'm going to show you how to manually do it, and then I'm going to, so you can get the concept down, then I'm going to take you through and I'm going to show you how to automate it. All right. Because automating is where the whole magic comes in. Man, this market's flushing. Okay. So let's say that we think, now this is just hypothetical. I'm not trying to make you a trade recommendation right now. We're learning right here. This is a classroom environment. So right now, let's say that we think that this market's going to come down and turn around and go back up. All right. And what we want to do is we want to intercept it on that turnaround. Now, there's a strategy that we call the first green candle to make a new high. All right. Now, right now, it's making lower highs, lower highs, lower highs, lower highs. So lower highs, lower highs. Look at it go. Holy cow. Lower highs and lower lows, lower highs and lower lows. All right. So the market's in a downtrend, obviously. And of course, the price bars are red, indicating that as well. But we think that this market might turn around and start to go back up, and we want to catch it when it does. All right. So we're going to try and catch that reversal. Now, the way we could do that is we come in here and we hit a stop order. Okay, so we hit a stop order, and you'll notice that Track and Trade is a drag and drop trading tool. So when we click on stop, we move that in here. We can move it up and down, up and down. We put it anywhere we want on the market. Now, Track and Trade is smart. It knows that if it's above, it's going to be a buy stop, because that's the rule of a buy stop, right? If we put it below the current market price, it becomes a sell stop, because that's the rule of a sell stop. It has to be below the current market price. A buy stop has to be above the current market price, which is a green line versus a red line. So it kind of does it for you. You can't place the order wrong. Now, if I were to come in here and put this in, let's see, this is a buy stop, would be green above, and I'm going to put a sell stop below. You'll notice that it's red. Now, if we do the limit order, a limit order is just the opposite. So if we come in here with a limit order and we put a limit order above, you'll notice that the limit order is red, and below the limit order is green. That means that it's going to buy, right? A limit order is going to buy. If the market goes down and touches it, it's going to buy, and you're going to go back up. A stop order means that it's going to sell. So it's going to have to go through it and then continue going to make money. Does that make sense? Same thing on the upside. You can get in. These are both open orders, all right? They're open orders. So we're not in the market. So this is getting us into the market, both with a limit order and a stop order. One is a stop limit. One is a buy stop. One is a sell limit. One is a buy limit. One is a sell stop. Okay, real simple, real simple. Two different orders, two different order rules. It's just so that you can have options for you. All right, have your strategy set up however you want. Let's exit out of those again. I'll lay them in there. You can see one more time. If we want to put a stop order above the market, that means the market is going to buy as it goes through that green line. Now, we can move that anywhere we want, okay? So the reason we would have that one is because we think the market's going to go up. We would want to catch it on the way through, all right? It's an intercept order, so we're going to catch it on the way through. Now, it's going to be the same thing on the downside. We put our stop order in here below the current market price. It's a red one, so as it goes through that stop, that sell stop, it's a red one. That means it's going to just sell right there at that location, and then we're going to expect that market to continue down. We'd make money. All right. Now, the limit order is just the opposite. The limit order, again, it would have to come down, touch that green line, and then turn around and go back up to make money. These are open orders to get in. Same thing if we go to the upside, limit order, set it up there. It's above the market. It's red. Therefore, if the market goes up and touches it, it's going to get you into short position, meaning that you're going to make money when the market goes down. So to make money, the market would have to turn and come back down. It's a strategy. You can do that if you want to. All right. So that's how that's working. Now, we can use these orders in different ways as well. We can come in here. Let's say we're in the market. So I'm going to use a buy market. Buy market order is just the fastest way to get into the market. If I think the market's going to go up, I hit buy just like that. All right. We're in the market. We're long. Now I can use a limit order above the market, which is still a sell. It's an open order, but because I'm in the market, if it touches that red line, it's going to take my profits off. It's going to get me out of the market. It's going to flatten my position, right? Because I'm long one, my limit order is above. Now, if it goes up there and hits it, that's going to take me out of the market and make me money. So I can also come in here with a stop order. I'm going to put it below the market. So now I'm long one. I have a stop order below, which is a sell stop, which means that if the market comes down, it's going to hit that and flatten my position that way, but I'm going to get out with a loss. All right. Does that make sense? So we're going to have the sell stop on the upside, but that's going to get us out of the market because we're already in the market. We have a sell stop on the bottom side, and that's going to get us out of the market because we're already in the market. If it hits the limit, well, it's going to get you out of the market with a profit. If it hits the stop, it's going to get you out of the loss. All right. Now we could do this in reverse. We could come in here. Let's get rid of these. We'll just exit these off. And look, this is a limit order up here. What if we put a stop order up there? And what if we put a limit order down here? That's just the opposite, right? Now, instead of selling, we're buying. We're still in the market. We got our one long. So if it goes up and it hits this order right here, this buy stop, it's going to just buy another one. And if it does that, now we'll be in the market with two contracts, two positions, and it's going to dollar cost average those. So our actual order will end up being, when it hits that one, it'll say, well, let's take this one and add the quantities together and divide it by 2. And then you're going to get what we call a dollar cost average, and your order would end up right down in here somewhere. That's not a very good representation. It's going to be almost dead center. Okay. So it's going to be dead center. It's going to bring those two together. That's your dollar cost averaging for entry. So that's a nice, fun way of doing it. So that's what's going to happen if we have a buy stop above the market and a buy limit below the market. Now, buy limit below the market means that we're long the market. If the market comes down and touches that buy limit, it's going to fill, and then we're going to dollar cost average, and we'll have our order will be here. Our average price entry will be here because it's going to take the quantity of the first one, the quantity of the second one, add them together, divide them by the quantity, which is 2, and you're going to get that halfway through. All right, so that's going to bring your average price down to here. But you'll be long 2 contracts. So that's how that works. Now, the really cool thing about this is we can automate some of this. Now watch this. I'm going to come in here. We're going to clean all these off. Let's exit out of the chart. And now what I'm going to do is I'm going to come in and I'm going to say, okay, Land, that's really cool. We got the ability to put orders on there, and you can drag them around. You can put them into different prices, and you don't have to sit there and type into an order box the price you want it to. You just grab it and drag it. Just move it on the screen, wherever you want it. All right, wherever you want it. Once the order is filled, you can't move it, right? Obviously, because the price has been filled at that level. But until it's filled, you can just move it to the new location, wherever you want. And it's a whole line all the way across there so that you can line it up with previous areas of support and resistance. Okay. So that's how that works. And then you just right click on the little tool and you can delete it and get it off the screen. Now, that's the fast way to trade. All right. Now, what we're going to do is we're going to come in here and I'm going to show you another neat little trick. So let's say that I'm going to hit buy on this market. I'm going to hit buy. And now I'm long the market, right? But I want to stop at a limit on there. Well, there's a way to add one, right? Watch this. You can right click on there and you can say add OCO. Now, OCO stands for one cancels other. So we're going to add OCOs. Now in track and trade, because we're a drag and drop tool, see as I move my mouse up and down, that puts a limit order above and a stop order below. So if I put my stop in here, it's going to stop me out and stop me from having a loss, and it's going to put my profit-taking limit out there to take a profit if it makes it. Now, the great thing about that is if it hits my limit order, notice that they have lines between them, meaning that they're all connected together. All right. So if that market goes up and touches that blue line, well, it's going to automatically cancel the stop order down here, and it's going to kill that order right there. So everything will poof, it'll be gone off the screen. It'll clean it all up for you, and you won't have these leftover orders out there that you have to clean up and worry about. That's called one cancels other. So if the stop gets hit, well, now that one will be canceled. That will cancel the limit order. All right, now let's see if we can do an example of that. I'll come down here and I'll bring that limit down right down to see if it won't touch it. There we go. And see how it clears the whole thing off without you having to go in and do that for it. All right, so that's a nice automated system that you can do to help you automate. Now I'm going to show you something else that's really cool. You can come in here, and with track and trade, you have the ability again to drop this in. You can drop a buy order above, you can sell order below. Let's say that now we think that this market's going to come down. We're going to try and capture the reversal. Now, there's several things that we can do to that, okay? We want to catch the reversal. So it's already going up, so we can't catch an up reversal. It's already going, all right? I mean, there's ways we can do it, and I'll show you that too. It's a little bit more advanced, but you want to get into a trend that's going up. I'll show you how to automate that. Now, first of all, obviously, you can just say, oh, it's going up. I'm going to hit buy. There you go. And that's what we just did. So then you come in here, right-click, add your OCO, bring it down here. And the neat thing is you can put that limit order, your target price, where you're going to take profits. But now your stop's way down here. Now, this is the part that's really cool, because I can come in here and right-click on that and hit edit, and I can tell it to trail. Now, this is an OCO, so you have to use this OCO window down here at the bottom. So I come in here and I say, I want that to trail on those yellow dots, which in this case is the ATR, and I hit OK, and it's going to automatically start trailing up behind on those yellow dots and follow up behind the market. That's going to be a trailing stop, and it's going to get me out if the market turns around and comes against me, and I'm not going to lose a whole bunch of money, but it's going to hold the stop there, and it's going to move it for me. And remember, if it gets hit, it's going to automatically kill the limit order. So at this point, I have nothing to do. The computer's going to take care of the whole thing for me, and I can go cook eggs. All right, make myself a breakfast, do whatever I want. I can go out and play the guitar, anything I want, because it's going to take care of it for me. Now, it's not going to reset it again and start doing it again automatically. After that, I'm going to have to come back and set it again myself. But I can come in here and just walk away. Because if my stop gets hit, it's going to automatically cancel my limit. If my limit gets hit, it's going to automatically cancel my stop. And as the market moves, those little yellow dots are going to keep moving, and it's going to move that stop for me automatically. Let's give it a second here and see if it won't change for us. See if it won't move that yellow dot. Watch this. We got 39 seconds left until we get a new bar. We're on a 1 minute price bar, and it's counting down the timer right there in the top left-hand corner. You can see 33 seconds. So let's wait 33 seconds and see if we don't get a new yellow dot. And if it does, if that market rallies a little bit, that yellow dot will move closer, and you'll watch as the dot moves, the order will move with it. So that's called a trailing stop, an auto trailing stop. All right. Come on, baby. We got 10 seconds. Let's see what it does. If it doesn't go up and break those highs, the dot will just stay at the same level. So it probably won't move, but there we go. There you go. So it moved a little bit. See that? How it jumped? See how it jumped? It just trailed up on the next yellow dot. So again, we can pull this down, see if we can't get it to give us some money. And we can, there we go. And it cleared the whole thing off. All right. So that's how that works. Now I'm going to show you, you can do this individually as well. So you can come in here. And so for example, you can say, well, I'm by the market. Now you're in the market. We got a long position on there. To blow this up a little bit so you can see it a little better. So we got a long position in there. Now we can come in with our stop order and we can drop it down here. I'm going to drop it way down here, not up there. I'm not going to try and place it where it belongs. I'm going to drop it way down here. And the reason I'm going to drop it way down here is because the computer is going to put it where I want. So I'm going to click that. Now it's sat down there, and I'm going to right click on it and say edit. Now this is the manual method, and I'm going to come in here and I'm going to show you. I'm going to say, look, I'm going to trail on, I can do the ATR, which is the yellow dot. Or I can come in here and do price bars back. Now, remember, when we talked about price bars back, higher lows and higher highs. Now, the price bars back are closer than the little yellow dots. Now, I can make the little yellow dots closer if I want to, but I can come in here and tell it how many price bars I want to trail back. So I'm just going to say 1. And I hit OK. And look at that. It jumps right to the bottom of that previous price bar. 1 price bar back from what I call the action bar. So we got the action bar in there, and then we got 1 price bar back. And when I put that stop order in there, it jumped right to 1 price bar back at the bottom of that previous price bar. And it's going to sit there and trail up just like it does on the yellow dot. It's going to trail up 1 price bar back as long as we're getting higher highs and higher lows, right? Higher lows. As long as it's getting higher lows, and that's why I like to use the Fibonacci bars, because it gets good higher lows. So we get a nice little trend, higher lows, and then it'll trail up until it reverses and comes back and hits it and takes us out. If it gets a nice big long trend and trails up one low, we'll make a lot of money. If it just goes a little tiny thing and turns around, or even doesn't even go up at all, well, we'll get stopped out with a tiny loss. So it's a way of protecting you, but also locking in profits as the market moves, and you can just do it manually just like that. So there, the market turned around, give us a red bar, it came down and stopped us out with a tiny loss. And let's see, did it give us a loss? That was, I mean, it was right there. So probably a nice little, a tiny little loss, $2.50. All right. So that's kind of the way that one works. And you can do that manually. Now, the really cool stuff is that you can also set your limit order in there. You can come in here and you can say, I want a limit order. And you can do the same thing. You go edit and you can come in, you go, I'm going to trail price bars back with a limit order. Now, what's that going to do? Oh, that's going to jump right up, rowing price bar back. That's not what I wanted to do. We're going to do it on the, let's do a limit order on that little yellow dot. So this is where you catch those spiky dikey doos. Remember spiky dikey doos where they come down and they spike you out? Sometimes you're going to say trail, and I'm going to do ATR, and I'm going to go, okay, and this is a limit order. So it's going to trail my limit order up on that yellow dot. So if I get a little spiky dikey do that comes down and spikes me and then takes off and goes without me, well, it's going to put me into the market because this is the buy limit. And it's an auto trailing buy limit. So we got these yellow dots. It's going to automatically trail up on that yellow dot just in case it gets a spiky dikey do that comes down and spikes it, turns around and goes up. And you're like, well, Lan, what if it comes down and just keeps on going? Well, you're in the market long, so you better be sitting here to protect yourself, or you're going to have to put a stop order in here just in case. You can drop your stop order in down here, and you can say, okay, I'm going to have to move that one. Or you can come back and say 1, 2, 3, 4, 5, 6, 7. And then we can come in here and we can go delete. And I'm going to put a stop order. I'm going to drop it way down here. And I'm going to say edit, trail, price bars back. And right now I'm going to put it at 7. So if I put 7 price bars back, it's going to count back 7 price bars. 1, 2, 3, 4, 5, 6, 7. Find the lowest point within those 7 bars. And it's going to move and always stay 7 price bars back from the lowest point of the 7 price bars. And it's going to trail up 7 price bars back. See that now? It just moved. That's pretty cool, right? And our limit order jumped forward too with the yellow dot. There's lots of things you can do when you've got the capabilities of auto trailing all of your stops. You can auto trail limit orders. You can auto trail stop orders. You can auto trail for entry. You can auto trail for exit with any of those orders. So whatever you can think of, you can set up a strategy to manage that and do that. Okay. So that's how you set these things up. Now I'm going to show you another step. We're going to take this and go advanced one more time. Now look, we might get spiky dikey dude right here. We don't know if it's going to reverse or if it's going to spiky dikey do us, but if it comes down and touches that limit order, it's going to be long. So what we would want to do in this case is we want it to come down and touch it. Come on, touch it. There we go. We touched it. Now we want it to turn and go up again. Because if it keeps going down, well, then it would come down and hit our stop order, and we'd lose the money between where we got in and where we got out, which would be the getting in on the green line, getting out on the red line. That would be a loss. But right now it came down, spiked us, hit our little dot, right? And now it's turning around and it's going back up. So now we're making money. See that? That's how cool that is. We got a little spiky dikey do would normally stop you out if you were trailing with a stop order. It would get you out of the market. This one got us into the market on the spiky dikey do. Now the spiky dikey do or the market started to turn and go back up again. So now we're making money. So we got a nice fill there on that little pullback. All right, so let's go ahead and we're going to exit out of that chart. And I'm going to come down here and I'm going to show you got all these little QOCO buttons. See all these buttons down here? Now, what's cool about them is you have, when you right-click on a QOCO button, you can right-click on any of them. It doesn't matter. You can right-click on them, and you can start adding new QOCO presets. Now, the presets, you can see in the list how many presets I've got right now. And these presets are exactly the same for every button. So it doesn't matter which one you do it on. You're going to go in and you're going to set up a new preset, or you're going to set up a preset, and you're going to go in, and each button, you can have as many buttons as you want. And then you can have as many settings for each one of those buttons. You can see that on QOCO1, I've got a scalp market buy. I've got a QOCO2 as a scalp market sell. I've got a QOCO3. I've got a trail stop ATR. This one was 4 as a trail stop price bars back. This one here is a scalp drop stop. This one here is a scalp drop limit. All right, so I can set up whatever strategies I want. So let's come in here, and it doesn't matter where you set it up, which button you set it up on. It's going to put it into the drop down, and then you can come down and choose any of those for any of the buttons. So you can have the drop down. The drop down is the same for every button, but you can have all of your list of all of your different settings, and then go make whichever button do whatever you want. Okay, so we're going to come in here, and I'm going to come in, and I'm going to add a new setting, and I'm going to give it a name. I'm just going to call it the YouTube Special SEAL Team 6 killer strategy. All right. And what we're going to do is we're going to say it's going to be a buy market, and we're going to set our stop automatically. We're going to set a stop in here at 25 points back. Let's do 20 points back. Let's leave it at 25. 25 points back, and we're going to put a limit order out here at 50. So we got a 2-to-1 risk reward ratio on our stop and our limit. And we're going to come in here, and now we can program the stop order to do whatever we want. It's going to be a market order. Now, of course, in here, we can put a sell market, we can put a stop, or we can put a limit. All right, so we're going to have in here, we're going to make it just be a market order. And we're going to come in here, and we're going to say, do we want it to, the stop order, jump, stop, trail. We're going to have it trail on, let's see, we'll just have it trail on the little yellow dots, which is the ATR. All right, so we're going to have it trail on the ATR. And we're going to make it be a day order. A real simple little order, just like that. Okay, so now we're going to go say, okay. Now I programmed that in to QCO6, but we could come up here and look. Now when you go on, you right click on QCO1, it's still in there. You can come in here and make QCO1 be our YouTube special SEAL Team 6 killer strategy. All right, but we got as many dots. You hit this little, if you want another button, you can just hit this little plus sign right here, this little minus sign to add or get rid of as many buttons as you want. So we got the YouTube special SEAL Team 6 killer strategy. So if we think the market's going to go up, all we have to do now is hit one button. Boom, just like that. It automatically puts in our entry, and it automatically drops our stop 20 points back, and it will start trailing on the yellow dot. As soon as the yellow dot catches up to it, 20 points back is closer than where the yellow dot is currently sitting. So it's going to sit there and wait for the yellow dot to pass it. Then it'll start trailing up on the yellow dot. So it's going to stay where you told it, 20, until the yellow dot starts bringing it closer. And then we set our limit out there at 50 ticks. So the limit is sitting there. And you can see we're on the micro account. So this is a tiny little account. This is for beginners. So we're going to come in here and we're going to make $25. So we're going to go from here to here. And you're saying, Lan, how much do you have to invest to make that $100? So you can come into the key and you can see that with this setting right here on day margin, well, it's $171 because we are on the NASDAQ. It's a little bit bigger market. So the day margin on this one, you have to have $171 in your account to trade this. And if the market goes from where we got in to where the blue line is, that would be $25 in profit. Yes, you could do 3, 4, 5, 6 contracts, whatever you want to do. All right. But you have to pay 3, 4, 5, 6, 7 contracts. You have to pay commissions on those 4, 5, 6, 7 contracts. Now, if you go to the mini account, this is a micro. If we go to the mini, that would be the same as having 10 contracts and you only have to pay 1 commission. So when you get ready to go up, it's a little bit more advantageous to go into the next contract size up so that you can have a bigger profit with a smaller cost of doing business. All right. Your commissions are smaller down here on the micro, but they're not 10 times smaller. So there's a balancing act you have to do, decide when it's time to move up to the bigger market. Okay. All right. So now we can go cook eggs. We can go mow the lawn. We can go do whatever we want because the market's going to take care of everything for us. All we had to do is just hit that one button and it automatically put us into the market. And now it's going to trail. See, now the yellow dot caught up to our stop. And it's just going to continue to pull that up just like before. And if it hits the blue, it's going to take our profits at $25. And it's going to also kill our stop order for us. It's going to clear the whole thing out. Now, again, you can come in here and move this. We dropped it at 50 automatically, but you can just grab that limit order. You put it anywhere you want. You can say, oh, I'm going to come in here and I'm going to try and capture that. What, we're up $5. I'm going to capture that $5. You can slide that right down in there and see if you can't capture that $5. Come on, baby, touch it. It's like candy. There you go. So we took our profits off, made some money. All right, $7.50. Now, if we were in the next bigger market, that would have been $75. All right, so take that into consideration. Okay, so that's how we do the buy market. Now I'm going to show you another really cool little setup. We're going to come in, we're going to do another one. I'm going to come in here and I'm going to add a new preset OCO. And this one here, now this name, you can give it whatever name you want. I kind of name them so that I can look at them and see what they're going to do. I give a little shorthand in there, and you can see that on this, it says over here, number 1, scalp, market, buy, stop at 25, limits it at 5, and I'm going to trail the ATR. So you can see in here, I kind of set them up with names that make sense to me. YouTube Special SEAL Team 6 Killer Strategy doesn't really tell me what it's going to do, but you can make the name whatever you want. The name doesn't have anything to do with the function of the order. So now we're going to come in here and we're going to do another one. This is going to be really cool. I'm going to call this a trailing stop YouTube Killer SEAL Team 6 strategy number 2. All right, so we're going to make this a trailing stop. So we're going to come in here with our stop order. And we're going to drop this in. We're going to have an attached stop. Again, let's do a little further back, 25, and we're going to put our limit out here at 50 once again. And we're going to come in this time. What we're going to do is we're going to trail the stop entry, the order stop entry order setting. We're going to trail that on the ATR. Now, this is one of my favorite strategies. But we can do it on the price bars back too. Let's do price bars back. And I'm going to trail it back one price bar back. So I'm going to capture the reversal. That's what we were talking about earlier. And then I'm going to have my trailing stop after that trail on the yellow dots, okay, the ATR. So I'm going to trail for entry and I'm going to trail for exit and I'm going to put a limit order. So this is a really cool strategy. This is one of my favorite strategies. Okay, and I'm going to come in here and we're going to go like this. And now we're going to drop this thing in here. And when we drop it on, again, I'm going to drop it way down here underneath the market so that it can go put it where it wants. All right, I'm going to come up here and try and put it where I want it. Oh, I want it right here. No, put it way down here and just drop it down here because the computer will then see what you're doing and it'll put it where it wants. So I'm going to hit that. And then notice what it's doing is that initial order is going to trail one price bar back. All right. For entry, because it's an open stop order. It's an open stop order, and so it's going to trail that for entry. And it's also got a stop order, but that's an OCO order that's up there that won't become activated. It's OTO, one triggers other. So my trailing stop for entry to the reversal side, it has to be triggered, and as soon as that's triggered and entered, the two outer OCO orders will become active. It'll trigger them, OTO. All right, so this is an OTO order, one triggers other. These are OCO orders, one cancels other. But right now we drop it on there as one whole system. And what it's going to do is it's going to trail up along what we've got, one price bar back until we get a reversal. As soon as we get a first candle to break a new low, that thing's going to put us in a short position. We're going to have our limit order take a profit. We'll have our trailing stop come down on the yellow dots. Now, all we have to do is wait for it to have a reversal. And we're going to just sit back. Whoa, almost went over the edge. Where's my lock? Oh, got a chair lock. There we go. So there we go. See that? How it's reversing? The red line, the red bar came back and it reversed and it just hit our order short. So now our stop is active and our limit is active. Now those weren't active before. They were sitting there idle, just as a marker on the screen showing you where they would be if the market got hit. So now the market turned and hit our order. We're short the market with one position. Now it's kind of pulling back against us. It's not dropping. So we got our stop order in there to stop us out at, we said, 25 points if we're wrong, if the market doesn't continue to fall. And it looks like it's going to continue to rise and stop us out. But that's what that's for. So if this thing continued down, what would happen is that yellow dot would flip to the other side and our stop order would start trailing down on the yellow dot and the market would go down and hit our limit order and then it would cancel both of those out, the stop and the limit. Let's see what it does. If it's going to go up there and stop us out. Oh, stopped us out. That's no fun. Let's do it again. All right. Come in here, one price bar back. Now, sometimes you got the spread. Okay. So the spread is in here and you can see right here, the spread is between 1 and 2 ticks. So what I do sometimes, I'm going to come in here and I'm going to edit that YouTube special Still Teams trailing stop killer. And we're going to make this, instead of one price bar back, you'll notice that in here you have the ability to have a 1.1. So what that is, it's one price bar, 0.1, meaning one minimum move or one spread, okay, one spread tick. So we can set that back just a little bit so that that same thing doesn't happen to us when the market comes down and touches the exact lower price. See how it touched the exact low price, which happens a lot. But our order will be one price bar below that, and hopefully we won't get caught in that same exact situation. Well, that was a good lesson for us right there. All right, so this is a little pennant formation again. Remember, we got a higher low and we got a lower high. So that's a pennant formation. And we like those little pennant formations because we can take those long, because that gives us an opportunity to drop in. If we're going to do price bars back, we can come in here and we can drop it above the market like this. And now what's that going to do? That's going to catch us going the long position, right? I mentioned earlier, we were going to show you how to get into a market and try and get into a trend. So this is a nice long green trend. You're going to try and get into the market. As long as you have a lower high, you can drop that in. The previous bar that it's going to trail on is the previous high. So it's going to drop that in there right there. See, so if it breaks a new high now, it's going to get you in. But if it made a new low, it would drop down and it would trail down one price bar back that way. So if it continues in the trend at this point, okay, so now we're back in the trend. Now the market's going to have to keep going up for us to make money. If it turns around and goes down, it'll stop us out. And we put that stop at 25 ticks back. And it'll just sit there and it's going to trail on the ATR, which is the yellow dot. So it's just going to wait and trail on that yellow dot all by itself as soon as the yellow dot catches up to it. And you're like, well, that dot's a long ways back. Okay, well, you can come in here and you can change the yellow dot and make it closer. See, you can come in here and make that dot closer, or you can make that dot farther away. And so that dot will start to move. And as soon as that market moves far enough and the little yellow dot gets closer than where your 25 tick ATR is, or trailing stop, it'll start trailing on that yellow dot. And that's how you get into a trend that's already moving rather than catch the reversal. So we're in the trend right now. Let's see what happens here. And then we can also come in here and we can play the other side of this. We can say, okay, let's catch the reversal. Now I better, I got 2 stops, so that'll stop me. So I can catch the reversal and that'll put me into a short position now. It'll close out my long position and put me in short. So I could do that too. So I got both sides playing now. So if the market continues, we'll start making money. If it turns around and goes the other way, we'll lose some money and that'll take us out of the loss, but then it'll also put us in short to make money on the way down. And it's all automated now. We got it all set up. All we have to do is sit back and wait for it to do something. All right, do you guys have any questions? At this point, you know everything I know. All right, see how everything's just moving along? Now both of our stops, our trailing stop for exit and our trailing stop for re-entry to the short side, are at the exact same spot on that yellow dot. Plus we're long 1, and this is our stop right here. This little, that's inactive because that's only if we go short, all right? So Kirk says he's following along. Makes sense to him. Now this is inactive too because this is to the short side, but this one up here is active, so we can move this one around. We can move it wherever we want, right? If we want to take some profits, we can bring it down. This one, this little stop right here is inactive. So you see where the market went right through that stop? It didn't fill it because it's inactive. It's an OTO. Kirk says he likes to trail the 1.1 on the ATR. That's the strategy he likes. So you can trail for entry on the ATR, which would be the reversal. I like to trail the price bars back when we got these ATRs, or when we got these Fibonaccis on, and then trail for exit on the ATR. So I like to trail for entry on price bars and trail for exit on ATR. That's kind of my little go-to strategy. This one I like best. All right, so we hit our limit order, made $13. This one's still active. It's trailing 1 price bar back. We can come in here, exit this system out, and we can come in here and make a new one. Well, we're coming down here. I think this SIL Team 6, we were trailing on the ATR. It was a buy market though. So we could change this to a stop. So our SIL Team 6 strategy now is an ATR stop, and we're going to make it trail ATR. So now we're going to trail entry for ATR and exit for ATR. All right. So now we come in here, we drop that in here. Uh-oh, I think yeah, okay, now it's trailing it. Oh, that's still 1 price bar back. Let's see, did I not switch it? Oh, it's this other one. All right. So now we're going to go in here. Now we're going to trail on the ATR, which is the little yellow dot. That's what Kirk says he likes to do. So we're going to trail on the ATR until it crosses over. So now at this point, we're looking for a reversal. All right, so the reversal is going to take us to the short side, and then this is an inactive ATR trailing stop up here right now. It's OTO, so this has to be filled first before that becomes active, and then this comes down and this will take us out, or it'll cancel this one, or this will take us out with a loss and cancel this one. So now what we're doing is we're looking for a fall in the market. We're looking for the reversal. Now, if you want to, you can see right here, not saying this is the right time to do it, but you can see that this is a little pennant formation. We got lower highs and higher lows. That's a pennant formation. If you wanted to, you could drop in here the other order, and we could do this one where we're doing the price bars back, and we could drop that up there, and it would now capture a breakout of that little pennant formation to the long side. Kirk says he likes the 2-minute bar. Yep, I like the 2-minute bars too. They're not quite so jumpy because you're combining 2 minutes into one bar, so you get a little smoother trend that way sometimes. So now we're short the market. Since we're short the market, we can leave that one in there, and it would reverse us to the long side if it goes back up. Let's see if it'll do it. Okay, so it took us out of the long position or the short position, and it's going to put us into the long position if it keeps going. Took us out with a $10 loss. Okay, the little yellow dot's moving our stop up for, that's an entry. It's going to take a short position. Oh, this is, we got one going both sides. So I think we didn't clean out our OCO. Let's see what happens here. We're bracketing the market with a trailing. Okay, there we go. That cleared it. Now we're short the market because it hit the short, and we got our trailing stop is going to trail on the ATR. It's going to sit there at 20 or 25. See how it's sitting there at 25? So it's sitting there at 25. So this will just sit there. It says trail ATR, but the ATR is still below. So if that market keeps coming down, that ATR will flip to the other side, and then the ATR will start trailing down that ATR to the downside. But we need the market to fall. Otherwise, it's going to go up and stop us out. It's going to hit that stop and stop us out with a loss. Come on, you rotten little dog. We want you to fall right now. But what if it goes up, Len? Well, you got all those QOCO buttons over there. You can do whatever you want. Start banging on them. Come on, we need it to fall right now. We're short the market. We might have got Spiky Dikey Dude on there, right? Market's up there quite high. It looks like it needs to come down. This CMF is backwards. TNT defaults or colors are backwards. So we need this to be green. And we need this to be red. That's an awful ugly green. There we go. Save as my defaults update. Okay, so that's what we want. So this is telling you to buy down in here. That's why it's green, and to sell up this. Sell all the way up that uptrend. So buy low, sell high. That's what that indicator tells you. Buy right here, sell out up there. But you got to set it like that. This is how you have to set it. Get the colors backwards. Okay, it's starting to fall. Come on, baby. Do we really want the NASDAQ to fall? Not really, but for this example, we do. It's being dead right now. It's not doing anything. We're getting the 10-minute bell coming here in 11 seconds, is it? 40, oh no, a minute and 11 seconds. We got the 10-minute bell. So everybody's sitting tight waiting for the 10-minute bell, because the 10-minute bell makes the market go usually. So we got 10 minutes before the market closes here on the NASDAQ. People are sitting on their hands waiting for the 10-minute bell. We got 1 minute. We got 48 seconds until that 10-minute bell. That's going to go up and stop us out. Ugh, we got nailed. Okay, let's wait for the 10-minute bell. We lost another $12. So we're only up $2.50 at this point with our little shenanigans we've been playing here. All right, let's wait 25 seconds. 22 seconds. Look at that breakout of that little pennant formation. That's a cute little breakout right there, just like a train on rails. Okay, watch and see if this thing jumps all over the place in 5, 4, 3, 2, 1. Boom. See that? That's the 10-minute bell. And what causes that is all of the automated quant systems reset, getting out of the market for their offsetting their positions because they're long. All right. That's what causes that. All right. So now what do we want to do? Let's say we want to catch a reversal. So let's say we think it's going to flush out and come back down. That's what we think. We'd want to catch the reversal. So we'd come in here. Again, we'd drop this thing on. And we're going to drop that under there. And we're going to trail up one price bar back. Is that what that's doing? Yep, one price bar back. We could trail on the little yellow dots, but we'd have to switch it. Or we could create a new one, come in here, and we'd come in here. And this one would be Killer Siltrine Stick Strategy. Oh, that's the same one. Let's come to this Kill Scene Strategy. All right, there's that one. We should probably name them something better so we can tell what they are, right? Trailing stop or whatever. All right, so we're trailing it out. Now you got a lower high. See that? You got a lower high. What if you think it's going to break above this previous high right here? If you think it's going to break above that previous high right there and keep going, you could put your order in above the market. We need the one that's trailing the price bars back, and I don't know which one that is because I didn't label it properly. So let's come in here. This is the YouTube one. Is that, what is this one? That's the ATR. Let's put in here the front of this is ATR. So we know which is which. Okay, and that means this one here, trailing stop. This is price bars back. Okay, so we're going to do PBB. PBB. Make sure you name your names of your files something so you can tell what they are when you click on them. Okay, so price bars back, we can drop that one up there and it's going to go to the previous price bar back, which is one price bar back, which is this high. So now if the market keeps going up and breaks a new high and keeps going higher, that will get us in and we'll be buying high in anticipation of selling higher. It's a tough strategy, but if you want to buy high and sell higher, that's how you do it. I like to buy low and sell high, but this is also catching a reversal. Now we can set up the limit order to do the same thing and do the automated trailing over here on a QOCO so we can catch the spiky dikey doos, which are buying low in anticipation of continuation of the uptrend. All right, so we could set up another QOCO to do that with the limit order like we talked about earlier. So now we got the market bracketed. We don't know which way it's going to go. So if it goes up, we'll get in long. If it goes down, we'll get in short. We just need it to move. Move and stay moving. The worst thing a market can do is go sideways. But we got 5 minutes till the market closes. We're not going to catch much of a trend in the last 5 minutes. But hopefully I've showed you some nice tools that you can use to help you be a little bit better automated trader and take some of the guesswork out of what you're doing. And so that, see that? The computer moves your bars for you, so you don't have to worry about it. I could never trade without this. I don't know, trying to do it manually and just hit those market orders and try and trade manually is so hard, really hard. This really simplifies things and makes it a whole lot easier for you. You're still in control. You still get to decide, but everything's set up for you mathematically, and it's all based on higher highs and higher lows or mathematical models on the ATR. You can use all kinds of indicators. Track and trade will trade all kinds of things. So you can just play with it and get comfortable and familiar with it, and that's how you do it. And again, for those guys who didn't see, let's come in here real quick. I'm going to show you. This is the software I'm using.
Okay, this is the software I use. It's called Track and Trade. They've got two versions, one for stocks, one for futures. This is the website, track, the letter N, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, while we were watching that, we got filled long, so it broke higher. So it broke the previous high. So we were trailing one price bar back, and it was coming down through that little pennant formation right here. And it filled our order when it broke higher out of that little pennant formation. So it's the first candle to break a new high because we were trailing one price bar back, and it broke the high. And we would, obviously, the goal is to see that thing continue up out of that thing, but it's going to come back around and stop us out. Oh, nope, it didn't. Or did it? Are we out? Yeah, we're out of the market. So it stopped us out because we were trailing, I think. Well, I thought we were trailing on the ATR. Must have been trailing one price bar back. Anyway, we trailing and it got stopped out, and now we're short the market. Okay, so now we're catching the reversal. So we got a fault. This market's not doing anything. 4 minutes before the bell's going to close. Look at that big, ugly topping tail, bottoming tail bar. Look at that thing. That's indecision right there. It's like, we don't know what to do. We don't know what to do. So it's just going all over the place. And now it just stopped us out again. Look at all these stops. We got stopped out really bad right through this little nasty spot. Len, you're holding your stops too close. Okay, well, you're the boss. You can put your stops wherever you want. You can put them back farther. All right. But we're not getting much out of here. 4 minutes till the bell rings. We're losing momentum. It's just being real choppy. Probably ought to sit on our hands right now for a minute. But that's no fun. Let's come in here and put price bars back. We'll just drop that in there, price bars back. Now we can't go in right now. We can't drop it in to try to catch a higher high right now with an auto trailing stop because we don't have a higher low, right? Or lower high. But we can come in with a market order and just go boom, just like that, and kick that thing in there and see if we can't scalp out 5 points. All right. That one's set to just scalp 5 points. See how the limit's set at 5? So all you have to do is just have the market go 5 points in your favor and it scalps you out. Of course, it's not going to do that either. Come on, you rotten little dog. Come on, pop up there. So hopefully these were some fun tools for you to play with. Shows you how to automate a lot of your trading. Makes it easier on you. Come on, touch it. Touch it. There you go. So now this one's still active because this is now you can do a static stop too. Have we got a static stop? These are all trailing. Watch, we can do one. I'll show you one more little trick. All right, this is called a static stop, and it's the one I call the Minesweeper. You guys ever play Minesweeper on your Windows? It's a Windows game. Comes with Windows. It's called Minesweeper. So I set up what I call Minesweeper. So we're going to come in and let's set it up down here on QOCO 7. And we're going to add a new QOCO preset, and I'm going to call it Minesweeper. All right. Minesweeper. This one works pretty well. So we're going to come in here, and it's going to be a stop order, and we're going to put our stop is going to be 25, and we're going to put our limit order at 6. So that means it only has to move six ticks to make money, but we're going to get stopped out with 25. So we got to put these in locations where we're going to have a high probability the market's going to move at least 6 ticks in our favor, and we're not going to trail. All right, there's no trailing, so leave the trailing off, and all we're going to do is just going to all be static. So we leave all these blank, other than we're going to make it a day. All right, so we're going to hit OK like that, and this is Minesweeper. Now, when you do Minesweeper, you drop that in there, and you put it at locations where it's going to have a high probability of breaking above a previous high or a previous low. So we're going to put that right there, and we could do another Minesweeper to the short side. We could put one down here. I don't know. We'll put it right here. All right. So all I have to do is break this high and go 6 ticks, and you're going to get paid your 6 ticks. Now, in a micro, 6 ticks is $6. In a mini, that's $60. You could do $50. Now, remember, you could probably have to pay about $5 in commission. So if you make $25 or $50, $60, right, you pay $5 in commissions. But all it has to do is break through that and go up 6 ticks. Now, this one didn't even do that. So we got stopped out with $12. Well, that sucks. So it went right up, touched that previous high, and didn't even continue high enough to give you 6 ticks. Well, that sucks. Stupid, dumb market. It's dead right now. There's no fun. We need a good, strong market, and then these things, you can play these things all day long. Sometimes I've done these Minesweepers with that where we got like 5 or 6 ticks and gotten like 20 or 30 winners in a row. All right, here we go. We're getting a little movement right here as the market closes. So it's got to go down, break that low where we set it, and just go 6 ticks. 6 ticks past that low right there on that price bar we put it. Come on, you can do it. There it goes. See that fast? We got our, oh, that was $3. Woohoo! We're on this little tiny micro account. You're gonna do these little scalps like that. You really need to be on a bigger market so that those are like $30 instead of $3. Anyway, you learn. That's how you do it. All right. Set your little minesweeper up in there and you just put those in there. And as the market breaks through, it breaks through. All right, guys, that's all I got for you today. Markets are closed. And of course, they'll go for another hour in the after hour session and in the futures market, which is what we're trading right here out of Chicago. The rules don't change like they do in the stock market. Kirk says, I need to understand the bracketed trades better. What you do is you need to wait until you have a setup, depending on what your tools are. You can't do it you can't bracket the market with the ATR, Kirk, because the ATR only stays on one side, right? And then it flips to the other side. You can do it with your price bars. So you have to do price bars back, but when the market comes down and has lower highs and higher lows, it's coming into one of those little pennant formations. You can drop it above one price bar back because the price bar is higher on the previous bar. And on the downside, the price bar is lower than the previous bar. So you can drop one on the top, one on the bottom as it comes into that pennant formation, and you can capture the breakout one way or the other. Of course, then, once it does break out, you want to cancel the other one just by clicking on here, we can do it right here. Watch this. We'll do it with the price bars back. We'll put it above and we'll put it below because we got a higher low and we got a lower high. And so we're on both sides of the market. So now we're on both sides of the market, and we can only do it with price bars back. We can't do it with the ATR. And then whichever way it goes, it's going to fill, and then we just delete the other one. And the way you can delete it is you just kill the limit order that you don't want, that it's on the one you don't want. So this is one set down here, and this is one set up here. If it fills this one, we kill this one. If it fills this one, we kill this one. And we do it just by right-clicking and killing the limit order, and it'll kill the whole set. Let's see if we can get one fill before we go. Before I let you go, let's see if we can get one more fill, and I'll show you how to kill the opposing side. Come on. Drop, drop, drop. After hours is really quiet. Usually we get a better run the last 10 minutes of the bell, but today was pretty dead, wasn't it? Got a lot of topping and bottoming tails. Whiskers, as Claire calls them. All right, here we go. Boom. Okay, we're short. That means we no longer need this long position. Not that you can't leave it in there. You can if you want to catch the reversal and try and go long as soon as it goes long. But right now we don't need it. So we just right click on it and say delete. And then that upper set is gone. You don't need it. Now as the market continues down, well, your trailing stop will start to trail on that little yellow dot because we got it set to trail the ATR. So the ATR is right there now. Almost about the same as where one price bar back could be. So we just need it to continue in the trend down. Come on, down, down, down. But don't go back up, you rotten dog. Your stop's too close, Land. Well, you can move it and reprogram it. So you can say, I want it on the... I don't know what that was all about. Are you guys still there? Something wigged out really bad. Okay, here we go. We're going to come in here and we're going to drag this back. Now watch, I'm going to move the stop order. Now the stop order is auto trailing. So it comes up and says, hey, wait a second, I'm doing this. Are you sure you want to turn off the auto trailing stop and do this yourself? You say yes. And then you can move it back again. Now you can grab that stop and you can move it just like you can the limit. The limit's not trailing. You can put it wherever you want. All right. But that was trailing. And so the computer had control of it. And you're like, well, I want control. So now that I moved it where I want, I can bring it up here and I can say right click, edit, and it's going to bring up your dialog box. And you can come in here and you can say, I want to trail that on the ATR, which is in the drop down right here. And you say, okay, now you've reprogrammed the stop. And the stop will now be on the ATR instead of, well, it was on the ATR before, but it was closer than what the ATR was. The whole thing froze for a second. My whole screen, everything went black. And then it all started popping back on again. And then it all came onto the wrong screens and then it all reset back, went to the right spot again. I don't know. This little program I use to broadcast is, I guess it's good. Everybody uses it. It's really popular, but I have a lot of problems with it. It's probably me. I don't know. we were having problems with our Pit News Magazine. Okay, why is that not? Okay, that's buy one stop. It's not trailing. Edit, we're going to trail to ATR. So it stopped trailing to ATR on the, when everything went black. But it's still not trailing. See, this is buy one stop. It didn't trail. It's not turning the trail on. Let's kill this for some reason. We got wiped out here, and we're going to reset it. Add OCO. We're going to come in, right click, edit. Let's reset this. Trail ATR. Okay. Now it's trailing ATR. And we got our limit order out here. We can put it wherever we want. So you can come in here and slide it right up there and take your profits off. All right, we just made another $5, $50 if we were in the bigger market. Okay, guys, that's it. That's all I got for you today. I hope that was helpful. And because we sit here and do this a lot, we sit here and play with all these tools and we trade like this, but a lot of people are confused about how to set those tools up. So hopefully that's a nice little tutorial for you, help you set your tools up so you can have a better chance of making those things work for you and work in your favor. It's got lots of power in there. If you don't know how to use it, no good having a real powerful Ferrari if you only drive it to the store to get milk. So learn how to make that thing floor that baby, and use the tools that it's got available to you, because it really is helpful. All right, that's all I got for you. We'll catch you next time here. I ought to play you a little thing here. I was telling you we're having a problem with Pit News Magazine. Claire's been doing it, and she's really had some problems. I've been having to help her a lot lately, and it's not her fault. We got a new version of the software on that one too, and that was the point I was making. This software, we got updates. That software, we get updates. Seems like whenever we get updates to software, it screws everything up. So I don't know. Hopefully we can get Pit News Magazine back up to where it needs to be so we can release it on Monday. Monday is when we're going to get our new Pit News Magazine, and we're all real excited about it. So here's where you can pick up Pit News Magazine.
Ready to level up your news game? Welcome to Pit News Magazine, where stories come alive. Read it, hear it, or watch it in our YouTube classroom. Right now, get your first 2 issues for just $1. Yep, only $1. Don't love it? Cancel anytime before the $39 yearly fee kicks in. Try it out, risk-free. Satisfaction guaranteed, or your money back. Visit pitnews.com. That's pitnews.com. Pit News Magazine. News your way.
All right, guys, that's all I got for you. We're going to let you go for the afternoon and practice with this all. What do we got? Today's Wednesday. We got Thursday and Friday. You can practice with it. Get your strategies all set up. And then Monday, you can practice with it. And then Tuesday, we're going to work on the stock market. We'll see you back here Tuesday morning for the stock class. And then back here Wednesday to do the scalp and trail again. And we'll work on the scalp and trail one more time a week from today, Wednesday, 1 o'clock power hour. All right. But we'll see you Tuesday morning, 8 o'clock, bright and early, so we can take the money we make here and go put it in the stock market. And I'll show you how to do that. That's what's coming up next. All right. We'll see you Tuesday morning, 8 o'clock, 8 a.m., bright and early, Mountain Standard Time. Make the adjustments for your time.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pit News Magazine.
Oh yeah, definitely subscribe to Pit News Magazine. You'll thank us later.